So I would like to ask Stefano. Stefano, who is, as I said before, a member of our ethics board. So how should advisors behave in this environment where it is not quite clear, where is the line really? What is moral, what is not moral, that's probably easier, but what is appropriate, even if it's legal, what is appropriate and how should we react and advise our clients?
Thank you, Frederick. Your question is not easy at all, I have to say, but is challenging anyway. So I think we should distinguish three levels of ethics. At the highest level, that's the fundamental ethics, the philosophical ethics, where we can just make three statements. One is that evading tax is unethical for taxpayers, of course. The other is that imposing taxes for a government above a given threshold is unethical as well. It's so-called the confiscatory taxation, but please don't ask me how much is this threshold, because there is not consensus at all. And the third statement is that for a government to waste the money collected in taxes is unethical as well. If we move to a second, there is some ethic related to the so-called good governance in tax matters. In this respect, we have to consider appropriate powers of the tax administration to implement legislation and to assess taxes, including transparency among jurisdictions and exchange of information at international level, as well as the recognition of the fundamental rights of the taxpayers. Therefore, the discussion on taxpayers' bills, taxpayer charts, and so on is part of this, let's say, good governance discussion. And that's also ethical. Then, if we move to the third level, which is the professional ethics, that's the Bible for professional accountants. It's the Code of Ethics for the Professional Accountants that YESBA writes, and where we have clear references for us. The starting point is one of the fundamental principles, and the principle of professional behavior, according to which in any circumstances a professional accountant shall comply with laws and regulations. So compliance with law and regulation is the first point, but the second point is also avoiding any action that could discredit and may discredit the profession. And in this respect, we at the Ethics Board are discussing a very challenging issue, which is the so-called project named NOCLAR, which is non-compliance with law and regulations, in which we are trying to define the circumstances under which we, a professional accountant, have to react in case of non-compliance. Of course, the debate, and maybe I will say some words later, but the debate here is, okay, everybody agrees that we have to comply with laws and regulations, but what does it mean? Is it unethical to reduce the tax burden for a client within the provision of the laws and regulation? And here we have the issue of the distinction between formal and substantial compliance. So the issue is it immoral even if it is legal? And the answer is not easy, but I would like to remind a fundamental principle of taxation, which is the rule of law. So the rule of law, on one end, says that we have to respect the law and no taxation can be imposed without a provision of law. And if a tax system is not working in today's economic and financial environment, we need to fix it. not trying to manipulate the interpretation of the legislation, trying to introduce so-called substantial interpretation or concept like immoral in legislation. We have to fix it, and the accounting profession in this role can have, in this project, can have an important role because the accounting profession in Italy and in many other countries is cooperating in drafting legislation. So for now, I will stop here in trying to answer to your question. Thank you.
May I ask just more question? As accountants, when we act as auditors, we always say we have a responsibility to the public at large. If you're acting as tax advisors, I think we are in a similar situation as a lawyer. So we have the interest of the client. So how can we handle that? Do we have a dual ethics? Do we have two standards of ethics when we act as auditors and accountants? And then when we act as tax advisors, we slightly change our ethical priorities. So how do we handle that?
Yes, I would say that even a professional accountant may have even three roles. One is acting as auditor. So the standards for an auditor are different because here the public interest is related to the transparency of financial information. And of course, the tax, let's say, factor in that is very important. Therefore, in auditing, in the activity of auditing accounts, the statutory auditing, I think that the obligation for a professional accountant also to report are higher. The professional accountant can operate in other two forms. One is consultant, tax advisor, as you said, and the other one is a tax attorney that defends the taxpayer in front of tax court. In many jurisdictions, for instance, in Italy, we have the right to defend the taxpayer in front of the tax court and tax court of appeal. So 2 degrees of jurisdiction. So if it's tax consultant, then the principle I said before clearly apply. That means that we have to stay within the framework of the law. Now there is the issue, the big issue of so-called aggressive tax planning, and here it's depends also very much what is aggressive, so it's not here, but within the legislation. Of course, we have the case law, which helps a lot in interpreting the limit and the scope of a tax advice. Then finally, if you operate as tax attorney defending taxpayer, you have the same privilege of a lawyer. So you have the legal privilege, and you have to defend even a person who is a tax evader, because like a lawyer is defending a man who is a murderer.
Okay. Okay, thanks you. Now, I'm sure Rob is going to take a slightly different view. I mean, Stefano threw the ball into the half of the government and said, well, it's more or less the fault of the government. They don't provide the right rules. If they don't like how taxpayers behave, then of course they should change the rules. So why don't they do it? And how are governments looking at it?
Well, thank you, Friedrich. Good afternoon. I was described at the beginning as perhaps being the bad guy. I've spent my career as a public official collecting taxes or spending them. I'd like to persuade everybody that perhaps I'm the good guy. Alan Olberg, the famous children's writer, recently refused an award for one of his books because it was sponsored by Amazon, and he said, I wouldn't wish to receive an award from a company that doesn't pay enough tax. And that's a very bold statement, isn't it? And I'm going to say two things. One, I'll just give a perspective from a public official perspective about the ethics of paying tax. But also, I think there are rules, there are issues for the profession to think about. Here we are at the World Congress of Accountants thinking about the future of our profession, and whether we work in business, or we're auditors, or we're tax advisors, or we work in the public sector. We want to encourage the very, very best people to come into the profession, and we're thinking a lot about the image and the reputation of accountants. And I think that more than any other issue at the moment, this issue of the role of the accountancy profession in tax is perhaps holding back our reputation. And I'd like to argue that we put our house in order in this respect. Now, perhaps these issues are at the fore at the moment because we've had a recession, and so companies and individuals are being called to account more than at any other time. But I think there are some underlying issues that I would just like to address. So firstly, from a government perspective, of course, governments have a duty to pass laws which are credible and to create tax systems which make sense and can be implemented. Governments clearly want to create international cooperation to avoid aggressive avoidance or planning or shifting. And I think governments realise that they have a role themselves to play. And as Grace set out in her presentation, governments actually sometimes use competitive tax rates for economic growth, and yet on the other hand are saying we want as much tax yield as possible, and we think that the boundary between evasion and avoidance needs to be redefined. And I think governments are right to say that. Government budgets, somebody once described to me, are like trying to land a jumbo jet on a postage stamp. And of course, governments worry about tax yield. If suddenly yield changes because a new technique of avoidance makes a difference to yield, it can make significant differences to landing that jumbo jet on the postage stamp in that year and mean that more borrowing is required, and that's politically embarrassing. But whilst government has to put its house in order and create the conditions for cooperation, including around its views on competitive tax rates, where is the accountancy profession in this? We've settled in a position, I think, Friedrich, where tax evasion is a bad thing and it's illegal. Tax avoidance is legal and the fault of government for not creating good enough tax systems. I would argue that aggressive avoidance is unethical. I think that we have a duty to pay taxes, we have a duty to create public services, we have a duty to ensure that societies can function well. And I think the profession has a role in promoting that people should pay an appropriate amount of tax. And I really do think that we have to think through the ethical issues of it may be legal to avoid tax, but is it ethical for a professional? Clearly, for those of you that are tax advisors, if you come across something that's illegal, you will report it to the authorities as evasion. But if tax advisors or a regulated professional, we are regulating ourselves as professionals, if we come across aggressive avoidance, which is perhaps at the boundaries of legality, does the profession have a duty? Does a regulated professional have a duty to report that for tax authorities to consider or look at? I would argue that perhaps they do, and I would argue that the profession needs to have a debate on this and to lead the debate. We shouldn't sit back and think, well, there's a lot of circumstances in relation to the actions of government or other things. I would like to see the profession lead the debate about the ethics of tax, including our own role as professionals. And finally, I'd just say a couple of things, if I may. When I was a child, those of you that know the UK, we had a program called Monty Python, and there was a famous sketch about being a chartered accountant. It put people off being accountants for a generation because it described the profession as boring. Now, we all know that being an accountant isn't boring. I wouldn't want a generation at the moment to be put off coming into the profession because we're viewed as unethical. I would like to see the profession responding to the challenge that we get from people like Margaret Hodge, and advising governments how it can create the right tax environments, advising governments on the sorts of loopholes it should seek to avoid, as well as advising citizens and corporations that paying tax is a good thing. Alan Olberg, who I mentioned at the beginning, his most famous book, for those of you that read to your children at bedtime, was called Burglar Bill. And Burglar Bill is an unusual burglar, Friedrich, because he gives back many of the things that he's stolen. And so I'd like to encourage people that don't pay enough tax to give a bit back. And when we're finished today and we go and have a beer or a wine, think with pleasure about the sales duty on that bottle of wine or that beer, and think how pleased you are that it's going to pay for public services, and think about what can we do as a profession to promote that good citizens and good companies pay an appropriate amount of tax. Thank you very much.
Very good. Now, Bill, you were on the receiving end of one of the most vitriolic, I think, critics that came across. It seems that the debate is particularly heated in the UK, which is amazing if you look at some of the hypocrisy that seems to come out of some of the politicians in the UK. David Cameron, on the same day when he was chiding companies for reducing the tax base in the UK and moving out of the UK, he offered to the citizens of France who were dissatisfied with a 75% income tax to move to the UK. So, and he didn't come across to him that this is probably a slightly strange position to take. But I think the Big Four have, of course, and that was one of the critics, they have made good fees, a lot of money on advising clients reduce UK taxes. So how did you feel, and how do you see the future business model of the Big Four firms and their role in this play?
Well, thank you very much indeed. I'm delighted to be here in Rome. Let me start with ethics, because I do think that ethics are an important part of the job that any professional is engaged in. Taxation, of course, is practiced by lawyers, by accountants, by some perhaps licensed purely under a tax institute rather than one of the other ones. And all the bodies that I've encountered all have at their heart ethical principles of openness, transparency, honesty, ensuring that their clients comply fully with their legal obligations. I'm very proud that in the UK we have a code for professional conduct in relation to taxation, which is signed up to by 6 bodies in the UK. 3 are tax bodies: the Chartered Institute of Taxation, the Association of Taxation Technicians, the Society of Trust and Estate Practitioners, and then 3 accounting bodies: the ICAW, ICAS, the Scottish Chartered Accountants, and the ACCA, all of whom I think are represented here. And all of them have set out the right sort of approach, both in terms of the work that accountants and lawyers should take in relation to their clients, and also to help them with some of the procedures that rightly follow. And the latest edition of that code starts to deal with the issue of tax planning. It is incredibly difficult to define clearly what is tax avoidance, what is tax planning, what is aggressive, what is regular. And in many ways, it's very important that clients who are wishing to consider their tax strategy, and often and normally it's tax strategy in the light of their commercial business circumstances, and that's a very important aspect to bear in mind, that considering their taxation needs to reflect all the sort of aspects, all their stakeholders, whether that's government, whether it's their customers, their employees, potentially their shareholders as well. Everybody involved with a company needs to reflect on that. We've seen quite a lot of new business guidance come out in this sort of area. And I think if you look back over the last decade, it's probably the decade, certainly where I come from, of increasing governance over taxation matters. We've probably seen increasing governance over a lot of corporate activities, but especially in taxation, we see signs of that, where there's no doubt that our tax authorities wish to have a relationship with the board of directors who lead the largest companies in the UK. And we've seen things like the head of our tax authority, Her Majesty's Revenue and Customs, meet the chief executive, the chief financial officer, the head of the audit committee of some of the UK's largest companies, and ask them, were they aware of the taxation position that their company was adopting, and ensuring that the company really is taking full responsibility. And so if that is a really important trend, it's one I think that we would very much endorse, that taxation is one of the biggest costs borne by a company, as everyone has discussed. And because it's so significant, the policies that underlie how a company approaches taxation needs to be regulated by the board of directors, who of course is answerable to all the company's stakeholders for the position it generally takes. And I don't think it's right to say, as some do, that the task of the board of directors is to minimize the taxes it pays. The task of the board of the directors, surely, in most countries, is to run that business as well as it can for the benefit of all its stakeholders. And certainly that is the legal duty in the UK, and I suspect is the legal duty in lots of countries generally. Now, of course, one of the challenges for many of us is that the judgments we make about taxation have undoubtedly changed over the decades. There's no question, if you look back at some of the planning that advisors were considering 20 years ago, it was much more formulaic. It was much more looking to think, was there a gap in the law that we should drive through? And fortunately, I think, in many countries, that sort of approach has really come to an end. And what we see now, of course, recognizing that tax is such an important cost borne by business directly, is that companies do need to think how best to manage that, but they do that in conjunction with their commercial activities. One of the points that it's certainly very clear, and speaking to the Public Accounts Committee, as Friedrich alluded to, many people don't have sufficient understanding of how business operates. A great many people have no idea what a profit is. And I know that's incredible in a room of accountants to pose the question, what is a profit? But quite a lot of journalists seem to think that a company should pay tax on its sales. And to us at least, I hope we know the difference between sales and profit. Normally there is a cost component in there. And part of the role I do believe that all professionals have is to help explain better how business does operate. Again, you've seen big trends, and Grace, of course, alluded to some of that in her presentation, where companies have looked to regionalize or centralize activities in order to achieve efficiencies. And they do that really to offer benefits to all their stakeholders. And it's the same with taxation. If you slap a cost, whether it's a tax or another cost, on a company, that cost will end up being borne by individuals. It's sort of obvious. A company is a legal constitution, if you like. Everything it does falls through to individuals, whether that's individuals as customers, whether that's individuals as employees, whether that's individuals as shareholders, including, of course, the pension funds that many of us hope will pay our pensions when we finally come to retire. And so we need to recognize that simply saying companies should pay more tax, in one sense is great, because companies are very good at actually handing over large amounts of tax to governments. But on the other hand, we also need to recognize that it's not very different from taxing our citizens directly, because ultimately the cost of all of that tax does fall through economically to all of us as citizens. So just getting to a fair and sensible answer through all of this remains quite challenging because of some of the lack of understanding generally. But I would certainly agree with anyone who suggested we need to have a values-led approach. Business, in my experience, does have a values-led approach. Whether you call it a moral question, I think moral is quite a difficult word. Morals are often associated with religion, and it's also true to say that morality tends to be an individual choice or an individual selection of values rather than something that's necessarily borne by society. But all the best companies that operate globally do have embedded in them their sense of values and how they wish to operate, how they wish to contribute in those societies in which they operate. And that makes a big difference. But ultimately, I do think we need to come back to the law, because law is the means by which tax is formally assessed. You cannot say to a tax collector, go and ask someone how much they feel they should pay. You have to ask them how much do they owe under the law. And if you don't like the law, then very definitely it's for governments to change that. And our role, clearly, in supporting business is very much to make sure that governments are fully informed when they do consider those legal changes. And if I do have one recommendation for everyone here, it is to encourage participation in the base erosion and profit shifting project being led by the OECD. Because there's no doubt that the rapid pace of change that Grace has covered means that it is all too easy to misunderstand some of the possible implications of the changes being considered. And for business and for advisors to give information to those governments participating, to the OECD, will help drive a better outcome. And certainly that's something that I'm very keen on. I personally participate. My firm very much wants to participate, as does the Chartered Institute of Taxation. So you'll find on the OECD website, a range of letters, all signed by me, with our comments in relation to particular aspects of all of this. Because what we would like to see out of this is a better legal framework, one that does give citizens more confidence generally that companies are indeed making a very significant contribution. We saw the figures that Grace put up for the developing countries. Actually, they're not so very different in some of the developed countries. In the United Kingdom, the top 2,000 companies in the UK, whether they're foreign-owned or UK-owned, those top 2,000 companies pay over about 60% of our total tax bill. So they're absolutely critical part of our system. And having confidence of the public that they're paying the right amount of tax is really important through all of this. One of the challenges we found when dealing with Mrs. Hodge and some of the questions she put about morality is you can't really say to someone you are making an immoral choice if the choices open to them are actually dictated by their commercial circumstances. So you can't say to an internet company, logically, it makes sense for you to have a substantial presence in each of the 250 countries in which you do business. Because we know that the internet means that some companies will need far fewer physical presences. What instead it does is put a responsibility on governments and the OECD coordinating all of this and working on this to find a better way of taxing that sort of situation. So I very much hope that the base erosion and profit shifting project will lead to clearer outcomes. I very much support the general outcome of the project because it is important that we don't have the economic disadvantage of potential double taxation and the chaos that would come from a failure of the project. So for all of us, I think it's very important we do participate and work towards a better tax system.
I thought Rob was already almost wanting to interrupt, so please go ahead.
I'm not going to comment about morality. I would like to say something about ethics. What is ethical behavior? Ethical behavior is behavior which is consistent with a set of values from a competent authority. And in this respect, there is a debate about whether the public is a competent authority. Because I think, Bill, we can be shifted along in an argument which says, do you know what, companies are simply behaving as they should, need to act commercially, they'll go where they need to go. And if that has tax avoidance consequences, it's just an unintended consequence of their behavior. I think the public know that isn't true. I think the public know that tax avoidance is affecting behavior and that companies are choosing to do things on advice in order to pay as little tax as possible. And I think my point is here, it has to be rebalanced a little bit. I think the public clearly feels that the balance of this argument about the extent to which you can legally avoid taxation, that the balance of that has got a bit wrong. When Warren Buffett said, "I'm embarrassed that my secretary pays more tax than I do," actually the public are going to listen to that. And so for me, the question remains, for us as a profession, that the balance of this argument needs rebalancing. We have to accept that the public is a competent authority. We have to accept that behavior is being affected by companies in order to aggressively avoid tax. It's not just an unintended consequence of their commercial behavior. And I don't think that would wash with the public. And I think if we're going to be a profession which is listened to, which acts in the public interest, which is trusted and respected to give advice, I think we as a profession have got to rebalance this argument a bit ourselves.
Thank you very much. I might remind you that you have the possibility to send me questions, which I will get here on my iPad. I got 2 remarks. One, I'm not sure what it really means. Please switch up the light in the room. So maybe some people fall asleep, but I don't think, because the debate is quite heated. The other one says, morality perhaps can only be sought from public effectively by the saints and prophets and not by the MPs whose level of integrity and morality is at times under question. They should act to properly legislate the tax policies for tax recoveries rather than blaming companies like Starbucks, Google, and Amazon, which are, after all, commercial entities aiming to make legitimate profits for their shareholders. Now, that is, I think, a true statement, but I think these companies would be badly advised if they would just try to minimize their taxes. Because sooner or later, these are companies who are very close to the public, and I think sooner or later the public will put pressure on these companies, and maybe they have a good tax structure, but they might suffer on their sales and their market share. So I think if we want to advise clients, I think almost we need to be less now these tax engineers and all the gimmicks and all the tax laws. We need to learn more about public relations and a little bit about public communication strategies.
Well, can I make 2 points on that?
Sure.
The first is that when you are dealing with an internet business, it's not like a shop that you walk into and purchase some goods from. You need that shop in front of you in every country in the land. An internet business these days does not need to be physically present in lots and lots of different countries. And it's not, in my view, very sensible for members of parliament to criticize a company because they haven't located in the country where the MP is based and they've gone to a different one. What you can't surely do is come up with something that says, well, you know what, even though it only makes commercial sense for you to have 3 physical bases globally, we'd like you to have 250, because you're putting a lot of cost in there, and that cost flows through to customers. So we have to have a recognition of what makes a sensible business choice. But allied to that, we then, through, I would hope, a coordinated approach from the OECD, reach something that causes the public to feel confidence that a digitally based company does indeed pay what it regards as a rational amount of tax. Now, we're about to see in Europe, from the 1st of January, changes the place of supply rules. And that sort of funny phrase means that where you buy a digital service, you currently pay the VAT that is charged in the physical location of the provider. And that rule is going to switch so that from 1st January 2015, you'll pay the VAT in the country where you, the purchaser, are resident. At the moment, all the providers of digital services are based in Luxembourg. And the reason, quite simply, is Luxembourg has the lowest VAT rates within the European Union. And since many of these activities are fairly low-margin activities, I think you will find that prices will rise from 1st of January. And that may be exactly the right answer, but it will have a consequence for everyone as individuals. And we just need to recognize that when we discuss taxation generally.
Now, before I ask Stefano for his comments, I would like to remind you that you can send me your questions, or if you like, we would then have 2 microphones at both ends here of the stage, and we would then give you also an opportunity if you want to come forward and address the panel as well. So, Stefano.
Thank you, Fredrik. I have some concern if we introduce the concept of morality in the field of taxation, because there is always a subjective, let's say, element. What I think could be more useful is to try to link some, let's say, principle with some fundamental principle of the Code of Ethics. For instance, if we can take one very famous statement based on the so-called Cadbury-Schweppes decision of the European Court of Justice, the border between legal tax saving and, let's say, illegal or aggressive tax avoidance was identified in the concept of purely artificial arrangement. So if we have a purely artificial arrangement that, even if formally legal, it's unacceptable, and so if it's not, just a tax saving can be acceptable. If we combine that with the concept of a code of ethics, we can consider that the purely artificial arrangement is misleading. And if it is misleading, therefore, it violates the principle of integrity. On the other hand, so it's against also the code of ethics. On the other hand, not existing a clear border, I think that we have to wait the decision or the advice of a professional tax advisor on 2 things. One, the professional judgment. Professional judgment is one key element, and also taking into account the reputational risk both of a client and of a tax advisor. So too much aggressive, let's say, advices can put at risk the reputation of the professional advisor and the client. But just to say one thing more, if we want to follow the title of this Congress, Learning from the Past, we have to remind that the beginning of the end of the Roman Empire started with the increase of taxation. And the reaction of the ancient Roman citizen was a very simple way of tax avoidance. They emigrated outside the border of the Roman empires toward the lands which were called the barbarian lands, where taxation was not applied. So they were missing taxpayer. There was what the economist more recently said, the disappearing taxpayer, so started at the beginning of the end of the Roman Empire. Now, there is here also a debate, was it moral or not to emigrate for tax reasons? And, but the consequence of that was the end the decline and the end of the Roman Empire. So I think we should also learn something from the past on that. Thank you.
I'm sure the abolition of slavery was regretted by all when the Roman Empire fell. The other issue here is what will governments do? I think, being serious for a moment, governments could shift the burden to indirect taxation because actually the sales will take place and their VAT could be increased. Clearly, most governments want to have direct taxation because it is redistributive. And governments do view indirect taxation as regressive. But I think one of the interesting questions here, we're thinking about what will happen to the profession, what will happen to tax advice, what will happen to ethics. I think the other interesting question, Friedrich, is what will governments do? And will it begin to change the balance of the way that they raise tax in a way that perhaps we can't yet judge?
Well, I think we're seeing already a lot of what governments will do. In first, the proliferation of GARs, because with this lack of being able to define the tax rules precisely enough to deal with the complexities of a lot of businesses, this is sort of the fallback. You have your general anti-abuse rule. You've seen in our project where now we're having a minimum standard to prevent treaty abuse. We're also seeing things on the other side of the spectrum, things like cooperative compliance arrangements to allow governments to agree with the taxpayer up front, sometimes before they carry out the transaction, to agree on what the tax consequences of that will be. So there are a lot of things that governments are already trying to do to deal with the complexities. I do empathize with the statement that was made that, well, governments should write laws that then businesses can apply. But the reality is a lot of businesses have very complex business activities. It's not the same as writing a tax rule for someone who earns a wage, a regular wage. It's much more complex. And so there are, despite our best efforts at designing rules, there are going to be these gray areas. And that's where, I guess, the issue of ethics comes in, professional responsibility, and ultimately, and this goes back to something Bill said about the role of corporate boards in making the determination. How much tax risk are they willing to take? And I think that's one of the reasons that we and others have promoted putting tax in the boardroom, because ultimately businesses need to decide what level of risk they're comfortable with. And until a few years ago, I think this wasn't really discussed. And so tax policy was being decided at the tax director's level, and there they were just focused on tax minimization, what the law legally, strictly permitted them to do without thinking of the broader issues.
Yeah, and I think their accountants have quite an important role to do, in particular if you think about country-by-country reporting and additional disclosure requirements that I think we are going to see in the future, at least for publicly quoted companies. Now, may I ask you in the public, I think we have heard some controversial views, whether there is someone who would like to come forward and ask a question, and I see one person. Thank you.
Good afternoon. My name is Doyin Wankwo. I'm from Nigeria. I recognize that this is an international conference, and the issue of ethics and morality will differ from country to country, from culture to culture, even from businesses to businesses. Now, if I am employed as a tax planner to an organization, and my responsibility is to help the company to be more profitable, let's put it that way, it will be difficult for me, under the ambit of existing law, to advise the company, my employer, to pay more taxes when they shouldn't have to. So my comment is that aggressive tax planning or fair, is more of a legal framework, And if we are concerned as a profession about this, then we can use advocacy either through national bodies or international bodies like the OECD to influence laws in various jurisdictions. Because if there's no penalty, why would anybody want to pay more taxes, really? Now, my second comment is a question, and that's for you, Grace. I see, and also from your timeline, all the work that the OECD is doing to create more equity and fairness in international transactions. And my question is, what about companies who are not under the OECD? Would we not be creating undue advantage for them? For instance, if they don't have a ceiling on interest deductibility, or what is the plan to bring these companies under these countries under the same rules?
Thank you. I think it's up to you to answer that one.
Maybe I'll answer the specific question. First, maybe I should describe which countries are already involved in this project very directly. You have the 34 OECD member countries, which comprise basically all of North America plus Chile in the Americas. Then you have virtually all of Europe, and then you have a number of Asian countries and in the Pacific. So you have Korea, Japan, and Australia and New Zealand. In addition to that, we have all of the G20 countries. So there you have Argentina, Brazil, China, India, Indonesia, Russia, Saudi Arabia, South Africa. So already there we have 44 countries. On top of that, we have the regional networks we have with countries around the world. And what we're trying to do is to develop a broad consensus on these issues. Now, at the same time, I have to say that what we do is not like the EU. We don't issue directives that become hard law. Our work produces what we call soft law, basically guidelines, best practices, etc. And I think our soft law process works pretty well. From experience with, for example, the Model Tax Convention, with the transfer pricing guidelines. And so what we will be doing is working with all countries on these issues. Now, the beauty of some of the rules that we have established, like the hybrid mismatch arrangements, there we have established a primary rule and a secondary rule. So if a country doesn't implement the primary rule, the secondary rule kicks in to prevent that kind of mismatch. So we are creating those kinds of things that have built-in protections from precisely the situation that you described. We're also really trying to neutralize more generally the effects of aggressive tax planning so that you don't necessarily need all countries participating in this, although, as I mentioned before, most countries have a lot of interest in ensuring that taxes are paid in the way that they intended and to avoid these distortions that result from the separation of profits from the economic activities that generated them. So I think we will see a lot of uptake. I know I've spent a lot of time talking to countries in different regions, and they're all extremely interested in this. So you may be thinking, and maybe you didn't want to say it, tax havens, for example, that have zero rates. But those are precisely where we can neutralize the effects of those jurisdictions and the benefits of operating in those jurisdictions. CFC rules do that, and if we strengthen CFC rules, that will be one way to deal with it. So I think there is a way to neutralize where countries may not have an interest in participating or in implementing these rules. And on the other hand, most countries, I think, do have an interest.
Thank you very much. I think we could still continue to debate on this for quite a number of hours, but unfortunately, I understand we have used up our time. To sum it up, I think there are very different views, but I think one theme came across quite clear. We need to have a legal basis. I think it's very important that we come back to a situation where taxes are based on laws and not on public opinion, not on shitstorm in the internet, that we have very clear rules that define what is the obligation of a taxpayer. We understand that we are now in a transition period. Many things have changed, the environment has changed, the public opinion is expecting something, but then now the ball is, I think, with the lawmakers, and we can expect what comes out of it, and I think we as accountants then have an obligation. And if we at the beginning said taxes is what we pay for a civilized society, I think we should pay taxes also in a civilized way, because that makes the civilized society, and after all, law is the basis of a civilized society. So thank you very much for your attention. I hope it was worthwhile, and we brought you some new ideas to this topic. Thank you very much.